Hey y'all, this is Audra Hicks of Simply Home again, your Tennessee Realtor. Today I was going to go over some of the different types of loans available to you when you purchase a home here in Tennessee. So stay tuned. I put the real in real estate. And if you like my videos, please comment and subscribe. So I wanted to go over the different types of loans because some people aren't very knowledgeable on the different types of loans available and why they should be pre-approved for one versus the other. So I'm going to go over a little bit of things with you. Of course, lending is something that you need to know as a real estate agent because you need to know what types of loans are available, what your buyer is pre-approved for, kind of what we're going to need to either have for down payment or closing costs, and just go over a lot of things in the beginning so we know how to make the best or put the best foot forward when we make an offer on a home and go shopping. So usually for a buyer, if you don't already have a lender that you trust and know and already have one, then I have great preferred lenders that I try to put you with that I know and trust, and that when they give us a pre-approval and say and give us a green light for going shopping, that we're going to get to the end. So there are different lenders for different things. Some lenders have pretty much everything that you can think of in lending, different loan types and stuff. Some lenders only like to do your conventional FHA, USDA type loans. Some don't like to do THDA and other, different non-conforming loans and things like that. I kind of like the lenders that have a lot of things available because not everybody fits in the same box. Every buyer is different, so you're not going to have buyers that if one qualifies for a $300,000 house and one with the same credit, but their debt to income might be different, they might not qualify for a $300,000 house. It might be lower, it might be higher. So you just never know. So a lot of the buyers, I try to say, family means well, friends mean well, but when it comes to buying a home, get with the professionals, your real estate agent you need to really trust in, and your lender as well, and listen to them because everybody means well, or they might hear things and it's not facts. So if you ever have any questions, always confer back to your professional. Now, talking about the different types of loans, you have conventional loans. Those are usually ones, I think we've always done a conventional loan, me and my hubby, for anything. So usually that's for the higher credit scores, and you can do anywhere from 5% to 20% down. Now, mind you, if you do under 20% down, then you're going to have MI, which is mortgage insurance, on top of that monthly. So sometimes you don't want to go that route, but then sometimes it just depends on what funds you have available, because not only when you buy a house do you have a down payment, you have closing costs as well. So that's why I like to try to go over all that with my buyers to kind of know where we are and to know what our strategy is when we're trying to put in offers on homes and stuff. Do we need to ask for closing costs? Do we not need to? Like I've had buyers this year that they really had the closing cost, but they would prefer not to have to use that because they might need it when they move in the house. So depending on the market, and if you can, write the offer to where sellers can pay the closing cost, then it'll all depend on, if the buyer's willing. What I was saying is that I've had several buyers this year that we start out doing that, but then they're like, we don't need to ask the seller for that because we really we love this home and we'd rather be the one they pick for the offer. So, everything's different. So every buyer is different. That's what I love about this. Everybody's different. and every situation's different. So now with the conventional loans, it is the larger down payment. It's not insured by the federal government, so those loans are, I get several buyers that a year that do a conventional loan, but more often than not, you get the FHA loans. Now, the Federal Housing Administration, that is the FHA loans, they are usually the lower down payment, so a lot of people really like that because it's 3.5% down on those loans. So now you will have PMI for the life of the loan, or you can refi your house, and and especially in today's market where the interest rates might be higher, but of course they have decreased some over the past week too, and so we're seeing a little bit of a decrease, which is a good reprieve right now. But like I always say, you're either gonna buy a house, whether you're buying yours or your landlord's, you're buying a house. So I would rather much be investing in my own home and equity, building equity, versus paying the landlords off. But there are times when people need to rent. I get that. So another loan type is for our veterans, the VA loans. Some people are scared of that. They think they have misconceptions of that, whether it's a real estate agent or sellers. People have heard so many things, but this year on my listings, I have probably had half of them. The buyers were veterans and worked through VA loans and stuff. So that's where you got to have a great lender that knows how to knows the ins and outs of all the different types of loans too. But those are for the veterans. Those are available to veterans, active duty service members, and some surviving spouses. But they're backed by the Department of Veterans Affairs. So they're on those are zero down. So they would only have their closing costs that they would need to pay out of pocket, or see if the seller will give concessions and pay some or all of the closing cost on those loans. So then we move into the USDA loans, and those are rural development loans, and those are in the rural areas. Not all areas in cities have it available for you to buy a home in those areas. So you really have to pay attention for me, I have to pay attention to what houses they really do like, and not set them up for failure by taking them to a home that area doesn't qualify for a USDA loan if I know that they're pre-approved for that. So we really have to pay attention to that, and put in the addresses and stuff, and make sure that it is in a USDA area. So that is a zero down as well. All your government loans are going to be either 3.5% down or zero down. So now I almost lost my train of thought here. My train almost derailed. But I was going to go into the THDA loans. Those are available from the Tennessee Housing and Development Agency. So they have different various programs to assist the first-time and repeat home buyers in Tennessee. So now you have income limits on the THDA, and you have different limits for different things. So you really have to pay attention to that as well, because I think at one point in those loans, you really have to pay attention, get a good lender that knows the ins and outs of THDA loans, because income comes into play a lot with those. If you got bonuses or things like that, that can, if you're $1 over, you really have to pay attention to that. Now, with every loan, you're going to need your 2 years job history. If you're self-employed, you need, if you're not a W-2 salary employee, then and you're self-employed with 1099, then you're going to have to do 2 years tax returns. Now, there's some exceptions to the job, such as you might have been in college, so you have to provide college transcripts and things. So, I mean, I've seen that and just different things. So that's where the lender really needs to let us know where you stand. So, and also, your debt to income comes into play. So if you have a lot of credit card debt, or bought a lot of cars, or your income isn't up there where it needs to be to have the debt load that you have. So your debt to income ratios come into play on all the different types of loans, and they're all different for each loan. So that's where I say the lenders really need to know all of their types of loans that they have available for you. The other thing that you have is fixed rate mortgages versus ARMs, or adjustable rate mortgages. So if you have an adjustable rate, it might be lower the first year and then go up a little bit each year for so many years. Those I see a lot of people do when they don't have such higher credit scores. Some do that. It just depends on the circumstances. Everybody's different and what they feel comfortable in doing. Me and my hubby have always liked fixed rate because we want to know what our payment's going to be. The only reason for your payment to change if you're in a fixed rate mortgage would be your escrows, which is your taxes and insurance. So if you have your payment of your mortgage, you're going to have, your principal and interest, say they're $2,000, and then you have $800 worth of property taxes and insurance a month. This $2,000 never changes, but this over here could, because your taxes might go up. You're not usually down, of course not. Talking about property taxes, although I think we got our statement and they did go down just a hair, so I was ecstatic by that, but usually not. Now your insurance might go up or down depending on if you shop your rate every year or look at what your insurance is on a yearly basis. So that might go up and down, but whoever services your loan or your lender, your mortgage company, they're going to send you a statement usually every year that kind of goes over where you stand in your escrows versus what they project they're going to be for next year. So that might be where you either pay up front so much more because they project your insurance is going to go up because they've already received a bill from them, or and already paid that, or your taxes have went up or something like that. But they usually always send you that and tell you that. Now, there is like your non-conforming loans. Now, jumbo loans, if you're buying a home and say you're going to get $1 million home, that's going to be in the jumbo range. And so that's a non-conforming loan. That's different guidelines for those two. So there's options out there for just about everybody. Now, it just depends on your credit score, job history, debt to income, and just a lot of factors. And everybody's different. So you might have a friend that qualifies for a $300,000 loan and they make the same amount as you do every year. So you're like, why don't I qualify for $300,000 and I'm only $250,000? Well, then you look at the other factors. You're both not identical. You might make identical pay, but how you use your money, how you use your credit comes into play when the banks look at every individual person. So it just depends. That's where you need to get with a great lender, a great realtor that can sit down and kind of guide you on the process and stuff. So just wanted to go over that today with y'all. And if you have any questions, always feel free to comment below. But if you like my videos, please like and subscribe. I'll see you soon. Thanks, y'all.